future. We're talking real money.
Well, hi there. Welcome to Talking Real Money, the show about your dough. Hello, I'm Don McDonald, and over there at the offices of Appella, hanging out in the heat because they don't turn on the air conditioning on the weekends, is our good friend, Tom Cock.
I'm ready to give out their home phone numbers now. Call them and tell them, give us just
for
a
the
little
landlord,
air, please.
Yeah. They don't believe that you need air conditioning on the weekends. You're not supposed to be there, dude.
That's it. Yeah, apparently not. So I'll pack it up and be out of here.
You're supposed to be working Monday through Friday, 9 to 5 at the most.
They'll
and
turn the
generally
air on in the mornings
speaking,
until like 11. So
it's less.
Yeah, I know. Oh, I see. I get it.
You
now.
get it?
Okay.
Yeah. Does everybody show up every day, 9 to 5?
No.
I didn't think
Old
so.
baby boomers think, what, you go to the office? That's wacky and weird and out of date. Forget it.
Look what COVID did to us.
Yeah.
I mean, that's its legacy.
Yeah,
the world,
right.
Totally,
you don't go to work anymore.
It's totally changed. It's so weird. I never went to work. So, I'm different, but most people did. Hi, this is the show where we talk about your money, and we try to share information with you that's unique or valuable. But the main thing we want to do is give you what you want personally. That's why we take your calls and answer your questions at 855-935-TALK. That's 855-935-8255. So give us a call every Saturday. And I am a sucker for quizzes. When I see a quiz,
to test yourself.
I do.
Yeah.
I love to test myself. As a matter of fact, I do like a couple of crossword puzzles every morning now, and it's I don't always finish them, but I like to test myself, and I like quizzes that are like Ripley's Believe It or Not quiz, where the answer is like, oh, come on, really?
I mean, those are trivia. This isn't knowledge. This is trivia.
Well,
Let's be
they
honest
say,
here.
the Wall Street Journal says, are you a stock market genius? Take our quiz. But really, I don't know. Some of them are a little weird. Some of them are a little weird.
I would say, actually, having read these a couple of times now, stock market genius is somebody like,
Warren Buffett.
Or the academics. They're the geniuses. Okay. They figure out sort of patterns. This truly is just kind of fun stuff.
It is. Yeah. It's investing trivia, really. So let's start with the first question. Are you ready?
I'm ready.
So you get $1,000.
Yeah.
In 1925, you live for over 100 years. And in 1925, you were given $1,000, and you said you could put it into one stock. Anytime you wanted over that 100-year period.
Yeah. Anytime you wanted. That's important.
You could put it in any stock anytime you wanted over that 100-year period.
Yeah.
Which of these four companies would have created the most wealth over that 100 years?
And I will just say right out, frankly, I got this wrong. Don and I did this. I didn't get this one.
So
right,
here are your choices.
Yeah.
We've got companies that have existed for 100 years and companies that are brand new but have become $1 trillion plus companies. So let's start. A is Coca-Cola. Been around for a long time.
Yeah.
B is NVIDIA. C.
They haven't been around a decade, right?
I don't know.
Pretty short.
Yeah, probably longer than that. But
okay.
Altria, they've been around for a long time.
Formerly known as?
Don't say yet.
Okay.
Don't say yet.
Okay.
Because you got to know your company names.
Okay.
That's part of the trick.
Yeah.
And D, Apple.
Yeah.
Was the biggest wealth creator Coke, NVIDIA, Altria, or Apple?
I said Apple.
And I thought maybe if it had to be around for the 100 years, forgetting what the previous name of Altria was. This is my mistake. I would have bet on Altria if I had remembered that Altria used to be called, back when it was the company that made Marlboro cigarettes.
Yeah.
Philip Morris. Dude, that's a different kind of smoking.
Oh, God, they're smoking. It's Saturday afternoon.
You can tell you live in Washington. Because when Tom smokes, it's not like...
Aging baby boomer. It's all about the chewables now. It's not about the smoking anymore. That one surprised me. because I didn't think it through. And when I immediately saw it, I said, that's got to be Apple. Boom.
Yeah.
Got to be. But yeah.
Now, this one is a little complicated.
Yeah.
This one is a little complicated. Last June, the price of Berkshire Hathaway stock plunged by 99% due to a computer glitch. It didn't actually drop 99%. It just went down for a little while. But what if Berkshire Hathaway had really dropped 99%?
Would Warren Buffett be asking to live in my basement?
Yeah, right.
No, he wouldn't be.
And let's say you bought the stock when Buffett took over. You bought Berkshire Hathaway when he took over.
60 years ago.
But last June, it really lost 99% of its value.
Okay, fair enough.
So after that 60-year period, you would have had A is 95% less than people who just invested in an index fund.
Yep, okay.
90% less.
Yep, 95 or 90, yep.
You would have about half as much wealth.
Mm-hmm.
Or you would have 40% more than an index fund investor.
I got this one right because I went with D. Because he's done so well, it wouldn't have mattered.
Exactly.
I know, it's
he did
amazing.
so well over that 60 years that you could have lost 99% last year, and you still would have beaten indexes. Now, is the message here buy pick stocks? No, we talked about this. And we'll have more later. 855-935-TALK is our number. Give us a call.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
It's all about making money easier to make. I mean, that's really what it comes down to. We want to help make money easier to make, but not make in a way that's ridiculous, stupid, unbelievable, too good to be true. We're about reality here. How can you make money realistically, sensibly, logically, and without too much complexity?
I was just going to say complicated, because that seems like the operative du jour today. Like, it's 19 different things they do to this fund, and you're going to make, it doesn't work out.
It's not supposed to be. We're going to give you the easy way out. 855-935-TALK is our phone number. And let's go to Roslyn, Washington. Valerie, welcome to the show.
Hi there. Hi, Tom and Don.
Hey, Valerie.
I've been listening to you for about can you hear me?
Yes.
Oh, great. Okay. I've been listening to you for about a year and trying to kind of get some stuff put together for, we have a daughter who is 25, and she has some disabilities. She does work full-time, but she doesn't really have a high income potential. And I think the investment
Are you there?
Like that.
Something cut. I think somebody's calling you.
Tell them to wait a minute.
So she's got a 25-year-old daughter who does work for a living, but is not going to have high income, high earning potential in the future because of a disability.
Right. And what we're looking to do is, we have a Vanguard brokerage, so we were going to try to just put some brokerage money in for her and kind of break it down into like what you recommend for like a 70-30 mix of U.S. versus international. And then in the U.S., break it kind of a 70-30 into regular stocks like S&P, but also the small cap value and maybe emerging markets. So looking at like VTI, VBR,
Yep, we know the fund.
Boys.
Yep.
Yeah.
Mm-hmm.
Okay,
Yep.
and then VXUS for
Yep.
the international. What do you think about that and pitfalls of doing this sort of thing for our child? Eventually, it would go to her when we're gone, that kind of thing.
I think this is good. I like it. You got a kind of a large cap fund, then you got some small, then you got some international. Sure. I mean, the problem here in the longer haul may be the complexity because you have to rebalance those things.
Well, and the other thing that you need to take into account is what the purpose of this is, how it's going to be used, and if this is meant to be some sort of a lifelong income provider for her, then you might want to look into a special needs or supplemental needs trust.
Well, yeah, that's true. Yeah, the structure
to
of the
own
holding.
that money. I would not just put it in her name necessarily. I at least look into the options of special needs trusts that were funded by assets from you to maintain her throughout her life. But the portfolio,
Right,
I'm sure.
Yeah, sure, absolutely. Yeah.
Well, and I think we were thinking of keeping it in a brokerage for right now, just in case they are funds that we would need in our retirement first, and then.
Okay, so you're keeping it for you, but you're just sort of investing it in such a way that it would be of better long-term help to her. That's why you're leaning to more stocks. Is that right?
Right, and with her disability, we would not want her in control, so it stays with us, our brokerage for now, but we could have it go to a trust when we pass or when she's 65 or retired.
You could make a special needs trust the beneficiary.
Yes,
of that account.
Right, and we do have a trust set up with our trust specifies something in her name for a trust that her siblings could help. That would be the what do you call it? The manage it or be the trustees.
Yeah, if the question's about the portfolio, I think it's very good. Mm-hmm. We like Vanguard. That's well diversified, and I think it's well balanced. But we have a question for you.
Sure.
Yeah, it's been a while. When's Rosalind going to get another TV show? I mean, it's been like
that'd be fun,
30,
right?
40 years since, what was it, Twin Peaks? Or I mean, it's been a long
that
time
Rosalind?
Now, Wasn't it Rosalind?
I have no idea.
I think so. I think it was filmed in various places, but they had the Rosalind Cafe, which is up for sale. But all this, the balancing, I've learned from your show. So
thank you.
This is like the rock star show you guys have. So thanks.
Well, thank you. You're awesome, and thanks for taking care of your daughter. You're a good parent, and we appreciate you being out there. Thanks for the call. 855-935-TALK is our phone number. That's 855-935-8255. And now we're going out to the Midwest, or east of the Midwest, really. The Midwest kind of shifted over
the Eastern Middle East? The Middle East?
Indiana. No, it's Indiana. Steve, welcome to Talking Real Money.
Hello, Tom and Don. Quick question. I've got a couple of boys, one 20, one is 23. One is the oldest one getting ready to start out on his own. The other one's still in college. I got Roth IRAs for both of them already set up, about $10,000 each of them. And with talking with them, getting the sense that they're not a couple of boys that are going to kind of manage their investments. There won't be real hands-on. So I'm trying to think of a way where I can maybe use a target date fund along with, my idea was maybe doing a Schwab 2065 with 10% also, 80% of that, and then 10% in AVUV and 10% in AVDV on top of that. But come to find out, the Schwab fund has some things in it that are not the, I'd say, lowest cost. There's dodging cops in that fund and other things. Mm-hmm. So I'm trying to think what else I could do maybe to kind of make this easy for them, to kind of set it and forget it.
The thing is,
opinions on that?
My opinion would be pretty easy. I would use one of the all equity funds.
Yep, for kids this age.
Yeah, AVGE or DFAW. It's easy. It's for this amount. It's perfect. You get global diversification, and you get a little more leaning to the types of stocks that have done better over the long haul. So that's a no-brainer.
And then the key is to tell them not to mess with it, not even to think about selling or rebalancing or doing anything for at least a couple of decades, at least. Because if they leave just this, they never, ever, ever. Now, is it both 10,000 each or 10,000 total?
It's 10,000 each.
Okay.
And my only problem with that is that if they do have to get their hands in there to move things around later when they're 50s or in their 60s or something like that. Whereas if I did a target date, that would kind of move it on its own without them having to mess with it. But I mean,
if I was going to use a target, though, I would use Vanguard's targets because they're so cheap.
Yeah, cheaper.
But let me tell you,
did you say 2065? Are there still going to be people working in the year 2065? That's like 100 years from now.
In this case, they don't even need to, because if this is all they ever put in their Roth IRA, I'm putting them because retirement age is going to be 70. So I'm putting 50 years.
Okay.
50
years, 10K. What is it? What's it be there, Professor?
$1.2 million at 10% per year.
And whatever's left from Social Security, you're going to get those couple nickels too. So.
$8 or $9 from Social Security.
Hopefully that'll be enough to buy a car then. Hopefully,
right. A nice car though, a lovely car,
4 wheels and everything.
Yeah, you could, if you were going to go with a target date, go with the cheapest, the more index-oriented target date products. And Vanguard would probably be right up there at the top. Thanks for the call, 855-935-TALK.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
As you can tell, answering questions is the thing we like best. So we really encourage you to call us on Saturdays from noon to 2 Pacific time as we do our show on Northwest News Radio in Seattle. 855-935-TALK is that number. That's 855-935-8255. I'm Don. That's Tom. And in Seattle is Sam. Sam, welcome.
Hi, thank you. Hey, I got a question about, am I able to gift into a Roth IRA?
Gift? Yes.
Yeah, sure. It doesn't matter where the money comes from as long as the person receiving it has income.
Yeah.
Doesn't matter. Yeah.
Right. Because I've been I have a position in stock where I worked, and that's my way of getting rid of it.
Oh, no, that doesn't work.
You can't take those shares.
No, you can gift them money.
Yeah, you'd have to sell it, book the gain, and then hand it over.
Yeah, you can't slide
so
a...
It does have to go the same way. Okay.
Yeah.
Okay.
Yeah. You'd have to go into money.
That's the way they're doing it now. Then they're buying the total market index, and I was hoping there might be an easier way.
No,
okay.
You could gift them. You could gift them the stock, but not in the Roth, and then they would have your cost basis.
But they might have a lower tax bracket than you do, so that might save some money there.
Yeah, but it can't go into the Roth.
Right. Yeah. No
Good
way.
idea,
okay.
though.
Thank you. You helped me out.
If you have any other tax reduction ideas, give us a call. We're always looking for those.
They don't. They really don't.
They don't. There's so many harebrained schemes, ideas, wacky solutions.
No, you haven't found it. Trust me, you haven't found it. The IRS thought of it already. They did. I don't know how they've stopped, but there's always the backdoor Roth. I still don't understand why that exists.
I don't care. I thought
I figured
Big
they'd
Beautiful
nail it
Bill
in the Big
or whatever it was
Bill.
called that'd be bye, but they don't quite get to that list. So, no.
Oh, here's another one of this is a trivia question that I just love. This was done. This was an exercise, a financial exercise by the Economist magazine back in 1999. At the end of the 20th century, they imagined a character, Felicity Foresight. Of course, it's the Economist. It's British, so of course it would be Felicity Foresight. And her parents gave her $1 at the very first day of the 20th century, or not really, the very last year of the 19th century, but we're not going to quibble. They gave her $1 at the beginning of 1900 and told her You're brilliant, little Felicity. Every year we want you to place this dollar or its equivalent at the end of that year into the best performing asset class for the next year because, of course, you have foresight.
And you're rolling the money that you've made each year into and your next year it's going to be U.S. small cap value. The year after that, it's international, whatever it is. You're putting it in the best performer.
But you don't know what it's been. You're guessing what it will be.
Yeah, so you got to be smart.
But Felicity actually has foresight.
Yes.
So she does this for 100 years.
And I laughed when they said could be U.S. stocks or British bonds. I'm going to guess. British bonds have never been the best performing asset class in 100 years, but I'll go look. But no.
So, this is to show the power of compound interest. Yep. At the end of the 20th century, Felicity's dollar had turned into A, $10 billion.
One plus what? All those years of compounding.
$10 billion.
Yeah.
B, $100 billion. Woo. C, $100 trillion.
Now you have Jeff Bezos' attention. Okay.
Wow, now we're talking real money. Or D, $10 quintillion. Who ever heard of a quintillion?
How many zeros is a quintillion?
I don't know, but it's a big number. It's
you
a
could
really
take
big number.
To dinner, not worry.
Just to tell you how big that number is, let me put it in perspective.
Okay.
I looked the approximate value of all of the valuable assets on the planet Earth right now. Companies,
all the
homes,
real estate companies,
all of that.
And everything. Yeah, okay.
About $1.2 quadrillion.
Okay. So
this is quintillion, which is 5. Quadrillion is 4. Trillion is 3. So this is a lot more. So which one would you guess?
I think I did, and I think I got it wrong. I think I went with 100 billion.
I think you went with 100 billion, which sounds like an incredible number.
Yeah.
I mean, I would think
I didn't try to run it either, by the way.
No, you couldn't. Good luck running this. The correct answer is $10 quintillion, more than anything ever has ever been worth in total.
Can Felicity, does she need a friend or something?
This proves how impossible it is to predict the market every year consistently.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
You got money questions, we got money answers for you. Here on Talking Real Money. I'm Don. Over there's Tom.
Is that the Russian thing? Because yesterday we met with the Russians? Okay. Yeah, that was Alaska, by the way. This is Washington, so he didn't come anywhere near the continental United States of America.
It's part of the continent.
Okay.
I think that's a misnomer, the continental United States. Yeah, because it's
worked
still
for me
part
for
of the
60
continent.
plus years. All right,
maybe
way north. Maybe next time you can take the cruise to Juneau. It's lovely this time of year, I'm told.
Yeah,
so.
We've taken the cruise to Juneau a couple of times.
I know.
855-935-TALK is the phone number because we do love to take your questions here on Talking Real Money. And you can also, though, there's a little trick you might not be aware of.
What?
You don't have to call on Saturdays. We like it when you call on Saturdays, but you don't have to. You can go to our internet webby site. TalkingRealMoney.com. Yes, it does.
Okay.
It's lovely. It's got great stuff there. Lots of stuff for you. Much things for you to peruse.
And pierogi.
Yes, it's
and
lovely.
Okay.
No
vodka?
caviar. Vodka, maybe? No caviar. Where was I going? Oh, go to TalkingRealMoney.com, click the contact button, and send us your questions. You can type them or speak them. But here's one of the typed ones. We have a lot of typed ones.
We do have a lot of typed ones.
You people like to type.
I like them. Bruce from Rochester, Vermont writes, Dear Tom, Don, and Roxy, who apparently didn't get the memo that we're doing the show from here today. I don't see her. Do you think it's okay during retirement to keep 60 to 70% of our emergency fund in our brokerage account, as long as it's in a Schwab money market fund such as SNVXX? I can't envision any situation where I need the money so quickly I'd have to move from. Yeah. In today's world, by the way.
It doesn't take long.
No. They'll sell the security like right then.
And you get it the next day.
Sometimes the next day, but for sure 2
2 days,
yeah.
yes.
It's pretty doggone quick. So, no, I think that's fine. Yeah. He says
Well,
he trusts Schwab more than an online bank. The thing about the online banks, people don't get they're FDIC insured.
Yeah,
You can't go see your money, but can you really at Bank of America?
Trust.
I know, and the big banks just love it because they think, oh well, you don't trust them.
And it's silly because there is no way you're going to lose money in one of these online banks because. Let's assume it's a run on the bank. It's a 1930s run on the bank.
Silicon, whatever, a few years ago.
Today, we have things we didn't have back then. The FDIC is one of them. And what the FDIC does and has done over and over and over again when banks fail is they go to the bigger banks and say, you as part of your deal with us, you're taking on these depositors and you're going to pay them.
I think there was a deal in Seattle. Wasn't it like Washington Mutual or something?
Look around. Those of you in Seattle, look around at the banks that you drive by on a regular basis. Yeah. Do a lot of them say Chase on them?
Yeah, you might remember that story.
It's not.
Kerry Killinger does, I can tell you that much.
Anyway.
Okay.
Yeah, no. You're fine there, but...
Yeah. Sure.
But I love my high yield savings. I do because it's like
you're moving money back and you're trading it faster than Bitcoin.
No, I move money more. I move more money in than out.
I get you.
But it's like 4.5%, which the Schwab money market is 4.14.
There's 0.4 right there, man. Take it.
WBXX. Hey, you want to call us right now? Look at that. We have a line open, 855-935-TALK. Good time to call. Call.
Tom and Don are talking real money.
Hi, Don McDonald here. So, what's your plan for retirement? No, really. What's the actual plan? Because hoping the market goes up, stockpiling random investments, and praying your gut instincts are smarter than Wall Street is not a plan. It's a guess. And when the market gets bumpy, and it always does, guessing leads to second guessing. And second guessing leads to panicking. That's why you need more than a portfolio. You need a purpose, a strategy, a real financial plan built just for you by a 100% fiduciary advisor who's legally obligated to act in your best interest. Imagine that. Start your plan today with a free, no-pressure meeting at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because your future deserves more than crossed fingers and wishful thinking. By the way, no sales pitch, no obligation, just smart help for real people who want to stop guessing and start planning. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Calling us is relatively painless. Well, calling me is relatively painless.
Yeah, I can be kind of hard on people.
Sometimes when you talk to Tom, Tom is a premature curmudgeon. He has
I don't know if we could say that.
He has slipped into curmudgeonness a little earlier than most people. It's usually in your late 70s, early 80s before you go curmudgeonly.
Then in that case, yeah.
You are a premature curmudgeon.
Yeah, all right. Okay. Fair enough.
Yeah, he is.
By the way, as a program reminder, it'll just be me next week. So if you want to really take some heat, then
next weekend I am going up to North Carolina to visit my mother in the nursing home, which I really need to do. And speaking of which, we're going to go to North Carolina right now to visit with West. Hi, West. Welcome to the program.
Hey, how are y'all doing today?
Good, sir. Thanks for calling.
Quick question. I have B&D as part of my portfolio, but I've been looking at SGOV, which is iShares, a 0 to 3 months bond fund. Is there room for that to add to my portfolio? Is there some downside when rates start falling?
Two very different funds.
And it's been pretty steady.
Yeah, two very different funds.
Okay. Please explain.
Yeah, well, okay. BND is meant to reflect the entire bond market, right? Mm-hmm. It mainly holds U.S., government securities. It has some corporate debt. It's a little bit of other stuff, et cetera, et cetera. But it primarily is an index of all those bonds. SGOV, if it's what you just mentioned, far more short-term and far more only U.S. government.
It's going to behave a lot more like a money market account or a high-yield savings account than something that will maintain its yield over a longer period of time. One of the things we like about BND is the fact that if rates do fall, your rate will hold up for a while. You won't immediately, but with the SGOV, your rate will fall almost immediately. It will drop within a few weeks.
Here's something you could do if you just wanted to be a little more cautious with your fixed income. You could take a quarter of the money you have in bonds and put it in SGOV, and then take 75% and put it in BND. That gives you a little more tilting to shorter stability. And especially if you're kind of worried about the future of rates, most people are, by the way, are betting rates that are going to come down. So they'd rather be on the longer side. But if you felt like, I just want a little more stability, as Don said, you could add it that way.
But I'm telling you, it's not going to behave that much differently than a money market. It really isn't.
No, that'll be very similar.
Okay, well, I appreciate you clearing that up for me greatly.
All right, sir. Thanks so much
Y'all
for the
have a
call.
wonderful day.
You too. Take
Thank
care.
you.
855-935-TALK is our phone number. Give us a call, 855-935-8255. We started the show out talking about a Wall Street Journal article entitled, "Are You a Stock Market Genius? Take Our Quiz." And we really determined that this quiz is more money investing trivia. It's fascinating stuff. And this question, I wanted to make sure we got this one in, not only because the question is fascinating and the answer is fascinating. It makes for great trivia. It'll give you something to, when you go out with folks tonight, you can go, did you know? But the other thing the other thing I like about this one is it gives me the opportunity to talk about another word that's in here that I want to expand upon.
Okay. This is history.
This is
better than
history.
trivia in
This
my
is
mind.
history,
But okay. The Roaring Twenties, it says we're a wild time.
No. You skipped that one.
Oh, okay.
I wanted to go to question 7.
I should make sure I have it here.
Okay. Here, some of America's...
Here it is.
Yeah.
Okay. All
this
right,
is the
fine.
one I wanted to get
You
to.
can tell this show is completely unscripted.
Right. No.
Some of America's most famous companies originally had very weird names, or almost did. Jeff Bezos wanted to call Amazon Kadabra. That's true. By the way, I highly recommend the book, The Everything Store, about the beginnings of Amazon. Fascinating.
Yeah, but I love the fact that a lawyer said, sounds like cadaver.
Yeah, that's let's bury that one. PepsiCo was originally Brad's Drink.
I'm going to go get a
in the 19th
Brad's.
century. Yeah. Nike was Blue Ribbon Sports. That is true. Xerox, which became a verb, originally was the Haloid Company.
That's correct, yeah.
Okay. Another company that became a verb, Google, originally had a different and unusual name too. Which one was it? Was it googol?
Googol, Googol.
Yeah. Was it Ask Jeeves? That's something
B.
you can remember early days in the internet. Was it Backrub?
C.
Or was it D, Alphabet? Well, hopefully you know the answer to that.
Well,
or at least the D is unlikely answer.
Well, because D is what it's called
exactly.
now.
So
they
you
changed
should be able to put a line through that one.
Okay.
Yeah.
The correct answer is unbelievable, and it's the dumbest name possible. I mean, I
meant to look it up, but I ran out of time.
Of the dumb names, which do you think is the dumbest name on that list? Backrub.
Backrub.
That's what they were going to call it.
What? Come
now,
on.
I would have thought it was named for the number googol, Googol. Do you know what a googol is?
No, I don't.
It is actually a number. It's 10. Wait a minute. Let me make sure I have this right. Yes,
a googol?
10 to the power of 100. So that's 10 with 100 zeros following it.
Whew.
Now, that is more. Get this, just to show you how big that number is.
More than the centillion thing?
It's more than, much bigger than a centillion.
Okay.
Wow. It is more than all of the atoms in the known universe.
Well, let's see. There's Adam Chef. There's Adam Ant.
Yeah. And then there's the number googolplex, which is 1 to the power of the 100 to the power of 100. That's a googolplex.
That's what a black hole weighs. 1 inch of a black hole weighs or something.
A googolplex, the number is so big that if you were to write the number out, the number you wrote would be longer than the end from one end of the universe to the other end of the universe.
So you'd be writing for a while.
For an eternity.
Okay,
Literally.
I thought this, and I'll just be clean. I thought it was Ask Jeeves because Ask Jeeves was a web-related
it was a search
business.
engine. Yes,
I
yes,
thought so.
it was, but that was not it.
I never would have thought Backrub, and Alphabet I knew was the current name.
Now,
Google, I was like, nah, it wouldn't be that.
Well, you know where the name came from? The guy who was looking at this number. His 9-year-old nephew looked at that number and he said, "Well, that's so big it's silly."
Nope.
So it's a googol.
Yeah.
He came up with the name.
I love it.
That's a big number. That is really a big number.
And that's a very trivial question. If you don't get that one right, you still
really
could be
trivial.
knowledgeable about the stock market.
Now, this one I knew. I want to throw this one last one in here. I knew this
Which
one.
one?
Tom knew this one. But let's see if you know this one, okay? The father of John F. Kennedy and R.F. Kennedy, the grandfather of RFK Jr., was a gentleman by the name of Joe Kennedy, who was one of the wealthiest people in the world in the 1930s. And he speculated on the stock market, and he got out before the crash of 29. He sold all his stocks and bought real estate.
Okay, I don't know if he sold all his
Well, he
stocks,
sold
but
most
he
of his
saw the
stocks.
crash coming.
He saw the crash coming.
Yeah.
And
But why?
The legend has it that he knew about the crash because, A, he got an early warning letter from President Herbert Hoover.
Who was one of the smarter presidents when it came to money, by the way. So maybe.
B, he read it in a fortune cookie.
Makes more sense, yeah.
C, a Shoeshine boy offered him a stock tip. Or D, he was an early follower of technical stock market analysis.
That one I knew because it's an important part of history. It's got to be the Shoeshine kid.
He got a stock tip from somebody shining his shoes, and he went, wait, if he's giving stock tips, this is over. 855-935-TALK is our number.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
855-935-TALK to talk real money with the people who talk real money all the time. And we'll help you with everything we can. And let's go to Bonnie Lake, where the Little League moving up, trying to win people are from. And the Little League World Series.
Hit a big one here for us. Yeah, okay.
Diana, welcome to Talking Real Money.
Thanks for taking my call.
Are you sitting on every pitch, just waiting there to the fastballs? No?
No, not really, but
Okay.
I wish them good luck.
What's up?
Well, I have 4 grandkids, and I'm pretty well settled, and I would like to put some savings away for them, but I don't want to, for them to inherit it. I want to be able to give them something. My oldest grandson is 17, and since he was 9 years old, he's been an airplane enthusiast, so I've been buying him 3 or 4 shares of Boeing stock for Christmas every year.
Mm-hmm.
But I have 3 other grandkids, and I'm trying to figure out what I can do for them. And I was thinking maybe buy gold coins and just throwing them in the safe for them. But then I heard that gentleman talking about setting up a Roth IRA for them at a younger age.
Yeah.
What should I do?
How old are they?
8, 9, and 12.
Okay, they're a little young for jobs yet.
Yeah, and are you a believer
Right.
in supplying education? How about a Section 529
That's
plan?
where I was going next. Because let me tell you a
They're
little
already-
magical thing about 529 plans. They're to be used for education, but up to $35,000 if they don't need it for school can go into their Roth IRA when they're adults.
Their 529s have already been set up.
Okay.
The 17-year-old is pretty maxed out, and he's going to West Point. So
Wow.
he's taken care of.
Congratulations.
And the younger had a Roth IRA since they were about a year or 2 year old, and I do
They
contribute
can't
to that.
they can't do that
No,
unless they were
you
working.
mean they had a 529 since they were little?
Yes.
Oh, okay, yeah, the
Through
Roth,
you-
you got to have income.
through
Unless,
another-
1-year-old could be out, working,
Yeah,
selling apples or something.
I know
No,
that the
his
individual
parents-
stock idea, the gold coins are kind of
It's
cute
cute.
and all, but,
Yeah,
they're not great investments. I would probably set up an account for them, a brokerage account or something, with whomever you work with and buy a share of AVGE or DFAW, which basically buys them the entire global stock market. And that's the story, is that I just bought you the whole world.
Yeah.
And it's a better lesson.
World. It is a better lesson. I love that. And you could, as Don said, you could do it in a brokerage account. You could do it in a gift to minor, something like that, that allows you to, be part of it for a period of time. They're still young enough. Fantastic, by the way, that they've got the 529s. And that money, as you said, could roll over to the Roth. But yes, in terms of the investments, not on gold, not on individual stocks, but a diversified portfolio that would do fine for them for the long haul. Who knows what's going to happen to Boeing? It's hard to know.
Yeah. Good luck. Thanks so much for calling. And if you want to send us questions, go to talkingrealmoney.com on the contact button. If you'd like somebody to help you, just kind of figure out some of this stuff, how to invest better or build a portfolio, go to talkingrealmoney.com. No cost, no obligation, no high-pressure sales pitch. Click on Meet an Advisor.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor.
Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services.
Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.